Oh, hello and welcome, traders. It is Tuesday, June 11th, 2024. Let's get into it today. Talk a little bit about the markets and what's happening out there. I think one of the key things that I wanted to touch base on today is just why people are failing at trading out there so much. You know, they talk about, well, is it 90 or 95% of all traders, fail and wash out? With day traders, it's like 80% of all day traders quit within like 2 years. And I think one of the interesting things too is that most traders underperform the market, okay, by the average market index by like 1.5% a year, while active traders underperform by 6.5% annually. So what is that telling you? That's telling you that the individual investor can't beat the market index, and they're better off just putting their money in the market and being successful. And those that are actively trading are doing even worse. So they're trading themselves out of any gains at all, missing the markets by like 6.5%. And I think one of the things to take a look at is the less you know and the less money you have, the more risky investments you typically take on. So a couple key takeaways here is, one, you've got to learn about trading and investing. You've got to put in the time. Most people aren't willing to put in the time. They're just looking for the quick hit in someone's system that they can take on to make themselves wealthy. Well, somebody else's system may not fit your system. You may not have the same account size, the same risk tolerance, and you may not be able to really follow those trades and understand why you're even putting those trades on. But again, most trading decisions are not based on sound research. They're simply based, okay, on emotions and the need for entertainment. In fact, when the lottery gets bigger, the volume of trading actually goes down because people are now gambling on, I want to win it now in the Powerball, as opposed to I want to gamble in the market. So a big correlation there, that most traders are really just gambling, and they're doing it for maybe entertainment and the hopes of making a fortune in a short period of time, and just not doing it based upon sound research or tested trading methods and using a trading journal. Okay? What they forget is that trading requires skill. It is a profession. You need to treat it as a business. If you're not trading like a business, you're simply doing it as a hobby and you're going to lose money. You're doing it for entertainment purposes and risk and just trying to play the lottery to hit some kind of trades big because you see people posting big gains everywhere. You see people, going to prop firms and getting backed and seeing riches beyond, their dreams out there, as opposed to just get rich consistently and get rich slowly and let compounding do all of the heavy lifting for you. Okay? You don't need to win and make 100% in a year. Okay. What you need to be able to do is make 15 to 20% every year and keep doubling your money every 2 to 3 years. Okay. So that's what's important out there. All right. So let's jump into the markets and we'll take a look at what's going on. We'll get off video here. We'll get on the screen. And let's take a look at some of the charts and what's going on out there. All right. So in the ES here, we had a decent little day today. Markets closed up about $14, 0.27%. New all-time highs, by the way. So new all-time highs, we can adjust this now, 53.8625 on the ES. So new all-time highs here as the market's going up. One of the things to take a look at here on the ES, especially both the weekly and the daily charts. The weekly just entered a squeeze this week. So now we've got a pretty high squeeze going on with momentum moving to the upside, obviously bouncing off the 21, heading up. And if we look at the daily, now we've been in it for a longer squeeze here with a little bit of a momentum shift today as well. So MACD rising, RSI rising in a squeeze. This thing could continue to take off and move for a little bit of a while longer. And if we look at kind of the longer term chart. Let's get off the weekly here because we already explored that. Let's look at the monthly chart. If we take a look at the monthly chart, we were in a squeeze for, geez, almost a whole year until right back here in February. In February is when the squeeze fired, and we're now 5 bars into the monthly squeeze firing to the upside. This still looks pretty doggone good in here. So we're moving up higher, new all-time highs. The monthly squeeze is only 5 bars in. So we still have maybe a couple more months before the average squeeze, which runs about 8 bars. Now back here, when the squeeze fired, we went, February, March, April, May. Okay, so there's 4, 5, 6, 7, 8, a 9th bar before momentum started to come out. But even on that 10th and 11th bar, even though momentum was coming down, we still managed to go a little bit higher. So right now, we're still in good shape. The monthly looks good. The weekly looks good. The daily looks good on the markets. I do think we're getting close to being overbought, so I don't want to get bananas about it here. We're getting close to overbought on the weekly and the daily, but hey, any pullback is another potential. We've now got a higher high, maybe a higher low is coming right beyond that. All right, let's take a look at oil. Oil. There's a lot of lines on these charts, and I get it, but we are in, a downtrend from here, but an uptrend that stretches back all the way back here to April of last year. So we're in an uptrend since April, a downtrend since September. So you've got this triangle pattern, and inside of this triangle pattern, a bit of maybe a bull flag, if you want to call it that. So a bull flag here, which we're now at the top of on oil, potentially looking to break out. We're back above the 21 EMAs on oil. You've got MACD rising, RSI rising, squeeze turning around, and maybe looking to fire to the upside. So the daily chart looks pretty doggone good. And even on the weekly here, it's not a terrible looking chart. You're bouncing off the 21. A big hammer reversal candle last week, followed through this week so far in 2 sessions. This looks pretty good. We're almost all the way back to the 21 EMA. So oil looking really, really good. We actually popped a new oil trade on today. I tried to get into 2. I'm kind of glad I didn't. Because buying power is just right about that spot where I don't really want to add any more trades yet, but my buying power is in pretty good shape. So oil, I like it here. I'm bullish on oil, even though you can consider both of these a downtrend. I do like what we're seeing in oil, and I like the momentum that's happening on the daily. All right, taking a look at bonds, same type of a thing. You can consider this maybe a bit of a bull flag if you want, but really it's just been a downtrend channel that we broke out of, came down, touched the top of the channel, and now we're bouncing off of that. Losing some momentum, so we got some bearish momentum on the daily, but on the weekly, it's got decent bullish momentum. I still like bonds. You were given a gift back here. You were given a gift again last week and Monday. Yesterday was another gift to you to get back into bonds. I'm telling you, I like bonds. I like where we are without confusing things, too much more. I mean, this is definitely an uptrend that we have going on here. So you can see where things are. We could even draw another line here. So we're in a bit of a channel to the upside that we're breaking out of this downtrend channel. So let's and we don't need the line underneath anymore. We got a sense of that. Let's see where things go. If we break the downtrend line, bounced off of it here, this looks pretty decent on oil. So I like where we are on oil. I like where we are on bonds here. Let's take a look at gold. All right, so where's gold setting up? Well, gold's looking a little weak and a little toppy here. It looks like maybe you got a double top going and it's coming down off of that. Now we've had 2 days up, holding the 50 moving average here, trying to get back into this little volatility box here. Our gold's just been trading sideways now for essentially 3 plus weeks on gold. Nothing super bearish, nothing super bullish. It's a little weak on the weekly. It's a little weak on the daily, but really it's just a sideways trend. We're at the same levels we were dating back to, the beginning of April. So gold really has done nothing but gone sideways since then, but It doesn't look terrible. I think it's setting itself up for potential strangle opportunities as well. We're in a strangle on gold. And we're also in some other trades on gold. We've got some naked puts, we've got strangles, we've got 112s. We got a little bit of everything going in gold. If we look at the Aussie dollar, so on the Aussie dollar here, just in this nice chop sideways range, a bit of a descending triangle, but not really a good one at all. So you can probably wipe that thing off. And we're just going to keep watching. Maybe that's more of a support level. If we want to draw this trend line sideways here. Okay, you're in a nice sideways trend. We can extend this thing out to the right. So nice sideways trend. We'll stay in this for now on the Aussie dollar. Now you've got just kind of flat everything. You're in a squeeze though on the weekly, looking to potentially pop to the upside. Everything else is kind of just mild here on the Aussie dollar, but weak on the weekly. So let's just see where things go. Do we just stand in here? I think it sets up well for a nice strangle opportunity. Now the euro, based upon what's happening with Macron and France and the euro, European areas there, this has taken a hit for 2 days in a row. Now, both days we did finish off of our lows on the euro. Still bearish momentum on the daily, really starting to fire to the downside. But the weekly doesn't look terrible. It's just kind of sideways. I'm just staying away from it for right now. We broke the uptrend line. In fact, we could probably draw it a little bit better, but we broke this uptrend line. And now we'll see if that becomes flips to a little bit of a support resistance flip. Now we're really looking at sideways action here. Not even sure where we'll draw something, but let's look at this support area in here potentially. So we broke support finally. Will this flip to resistance or not? Do we rally back in after the smoke clears? We'll see what happens. All right, the NASDAQ, nothing exciting here except brand new all-time highs as this thing continues to move its way forward. Nice new all-time highs. Nice ascending triangle here. I would think if we can break through, we technically did break through this triangle in here already today. So we broke the triangle to the upside. This thing could be getting ready to make a little bit of a move as well. All right, taking a look at the Russell futures on the Russell. This is in a bit of a descending triangle, but we've been holding on for 2 sessions in a row. So 2 nice hammer candles here. We didn't get any follow through today, but we didn't get anything worse. We didn't get it, so tomorrow we'll wait and see what happens. If not, we're just really holding on to this previous resistance level that's now flipped to potentially support. Bearish momentum. We could absolutely break this to the downside, but we'll keep an eye on it and see what's happening. All right, I'm not really going to cover much else. We'll touch really quickly here on LE. So we're talking about live cattle here, extending out these lines a bit. So you can see we're in a little bit of a triangle type of an action here. We could go either direction. Looks a little bit bearish with momentum on the weekly and a little bit bearish with momentum here. So we're just going to let live cattle futures just hang out. We're in a great 112 trade here. We're all the way down at the 148 level. So we would have to really, really completely crash for that to happen. We're already 76% in on those naked puts, and overall this trade's up 80%. All right, so there's where we are on the markets. If we take a quick look at VIX, doing nothing as it always does, just kind of hanging down here around 12 to 13 range. We look at the US dollar, had a little bit of a nice gain as of lately, the last couple sessions on the US dollar. And if we look at interest rates as well, rates have just been moving sideways to slightly lower, very similar to what's happening in bonds moving higher to sideways. All right, so there's our recap of the market. Let's take a look at what's going on and what we got stacked for this week on trades. Let's switch screens. Let's move here. Take a quick look at what's on tap for tomorrow. So big day of news tomorrow. We've got core CPI numbers out tomorrow. So we got CPI tomorrow. They're expecting things to remain roughly flat. So there's no expected increase or decrease in the core CPI. Is supposed to come in same as the previous, so forecast 0.3%. We'll see what happens year over year. CPI has been hanging out right around this 3.4%. That's where the estimates are. We'll see. All right. The other thing we'll take a look at is crude oil inventories. Not a huge driver for what we do, but we do keep an eye a little bit on those inventories to see what's the trend, what have oil inventories been doing. And then after that, we wait till 2 o'clock and see if the Fed does anything with the funds rate, which they're not expected to do a single thing. So we're expecting no change here, but we'll see at the FOMC statement and the press conference that follows at 2:30. We'll see if Powell has anything earth-shattering to say that's going to move the market one way or another. I think the market's ready to make another leg higher. Powell could pour cool water on that, or he could give it a little bit of gas as well. So we'll see what happens in the markets. Let's take a look at our account for the session today. So finishing the day at 378 on Delta, 0.07%. So very Delta neutral. We're pretty good shape no matter what happens. 1589 on Theta. So a pretty good Theta number, hanging around about 0.3%, which is what you would expect when IVR is so low and VIX is down in the 12s. 0.31 is not bad. It's pretty good Theta overall. Net lick is at 504,812, so down just fractionally today on net lick. So it's down just a tad, nothing big. Most of this move was on the euro. So all of that move is really based on the euro, which our position was down about $1,500, $1,800 or something today. Even though overall it's doing fine. And then BP 326,617, putting us at 54.71. We were sitting at a nice 51% after yesterday. So we're basically right there where we could, on the cusp of putting a trade on. I did pull the trigger on a trade today. We're still in the low 50s, so I feel pretty good about it. I think the one thing to take a look at here is let's take a look at how we're doing in June. Obviously, this number is no longer correct. So let's fix that number. Nope, that's not what we wanted to do. And this should be J111. Okay. We are up 11,116 for the year. That puts us, or for the month. So $11,000 in gains for the month, and it's only the 11th, so we're in really, really good shape. We're already up 2.3% for the month overall so far. So I like where we are for the month of June. All right, we'll take a look, make sure everything's working out the way it should be here. Maybe a little bit of an error in some formula here. Did we close anything today? No, we closed yesterday an oil naked put. P&L for the month 11,116. So something's not showing up here. We'll take a look at that. Maybe we'll take a chunk through the pivot tables and see where things are. 0 TTE 640. So we'll figure it out. This is off by a couple bucks. Anyway, we are well on our way to our $15,000 goal for the month. We're already up 11,000 overall this month. So pretty happy with where we are. I will jump into my pivot table and head down. So I wanted to share a couple things with you. I do track periodically, one of the things that you can do with these nice pivot tables is see how different tickers are playing out. And so far for the year, as you would expect from my style of trading, and a lot of 112s and some naked puts and other things going on in ES. Not many strangles, but you got one on right now. It's accounting for about 36% of our overall P&L for the year, but oil right behind it at 31%, or I'm sorry, 33.8, almost 34%, $31,000 for the year. SPX, which is mostly those zero DTE trades, clocking in at almost $8,000. Bonds about 6,400. Gold's 4,400. The Aussie dollar 4,400. Our bill, 4% of our account so far for the year. 4% of this 93,000 that we've made in a little over 5 months. Okay, we're heading into the $100,000 range. That would be nice to hit $100,000 in gains by the end of the first 6 months of the year. So not a bad income from a really passive investing, active investing, however you want to look at it. So I think you're in pretty good shape here. Man, if we could pull out another $7,000 and hit $100,000 by the end of June, I'll be ecstatic on the year, far surpass what we were looking to do. And then, we tracked some strangles. We've talked about it. 30 out of 32 strangle winners on the year. So been a great strategy for us. And then one of the things I wanted to take a look at with you here is, strangles are one of my favorite strategies. And right now, I think we are in Strangle-Palooza. I think one of our members coined it today as Strangle-Palooza. I have more strangles on now than I almost ever have. I think I'm sitting on 9 strangles. I was actually trying to put on number 10 today. It didn't fill. It's the most strangles I've had in the portfolio. We've already closed 30 winners out of 32 trades this year. But somebody was asking, well, why don't you close your strangles early? Why do you wait for 50%? What if you get 25% in a week? And why don't you close? The main reason for me is I have an expectancy on my strangles that if I start to close them early and I don't take in enough income and you have a loser, you're going to wipe out that positive expectancy. What I don't want is small winners and normal size losers. Okay, that's going to put me in the hole for the year. Why I've been successful trading strangles over the years, decades, really, the most important thing for me is to stay consistent. You've got to, even though as premium sellers, we don't really let our winners run and cut our losers short. Okay, it's almost the opposite because we're selling premium. Okay, but you still got to let your winners run to your target to let your expectancy play out. So I do have to let my winners get to 50%, and I want to cut my losers, okay, at my targeted stop loss, which I recently tweaked a tad. But the other reason is these don't take that long. Okay? I know that the tasty trade method of putting things on at 60 or 45 days and taking them off when they either hit 21 days left in the trade, or rolling the untested side and staying in it for 16 years, or going inverted and doing other crazy things. Okay, I don't do any of that. I put it on, I take it off. Okay, I let my profits run to my target. I cut my losers at my stop loss levels, and I don't have to hold on for dear life. So I'm not holding trades thinking, oh, I hope if I go inverted, this can somehow get back to even after I rolled and booked a loser. Now I got to book a winner to cover. I don't like doing any of that. But one of the reasons I don't close early, besides not wanting to change my positive expectancy on strangles, is look at the days in trade on these things. My average days in trade on all of the strangles this year, and I broke them down by underlying so you can get a sense of what it has been, but 24.2 days is the average days in trade for the month, by ticker here. And so 24%, 24 days is not bad. The ones that take the longest are the Forex ones, the Aussie dollar and the euro. Those take a little bit more time. Those have been slower. And when I mean slower, 44 days, not too bad. And then 24, it's not bad at all. Oil, typically those come off in about 25 days. Gold strangles are winners in about 21 days. Copper strangles this year so far have come off in 15. I'm averaging 6 days in a trade, okay, for live cattle. Okay, 6 days is my average. Okay, only one trade though. Okay, the Russell, 20 days in trade, and then bonds, about 27 days in trade. So really, I mean, why do you have to close early for 25% winner when I can close and wait about for roughly 3 weeks and 3 days and close at a full 50% winner, which is my target? Okay. So I wanted to show a couple of these things because I really love where Strangles are. It's been one of the most prolific trades that we have. It's our second best trading strategies and methodologies of all of them. So we're running pretty good on Strangles. I like it, and I'm seeing Strangles everywhere. Okay. We just went through some of the charts. ES is still not set up well for Strangles. That one's not. Oil, set up well for Strangles. Bonds, set up well for Strangles. Gold, I think it sets up well for Strangles here. The Aussie dollar sets up well for Strangles. The euro, quite kind of out of the strangle business right now. NASDAQ, no. RTY, yes. Copper, yes. Silver, I'll say yes. It's pretty much right in there. The British pound, yes. Okay. Bonds, we already talked about. Live cattle, yes. Okay. That sets up lean hogs, yes. Okay. Wheat, yes. Corn, yes. Soybeans, it would be a stretch to say yes, but I just ran through a ton of strangle opportunities with you guys, and I think that's the best trade setup going right now. It's Strangle-Palooza. Get your strangles on. Okay. Get them while they're hot. Make your money in strangles. Fantastic return trades. We make probably more on strangles than any other trades that we do. And when we look at our strategy builder down here, typically we're averaging, looking for something around 7% a month on strangles is typically what we look for a return on margin. And if we looked at our closed trades, just picking out some strangles, here was one on the Aussie dollar, 24%. Here's one on the euro, 20%. Here's one on oil, 14%. Here's one on bonds, 10%. Here's one on the Aussie dollar, 18%. So just on and on and on. Bonds, 12%. Bonds, 13%. And I can just keep going. So we're doing really, really, really well. Love where we're set up on these particular trades. Doing great. So bottom line, do your research, get educated, okay? Understand what you're trading, okay? And the reason most traders fail, they're letting emotions, they're chasing the big returns, they're gambling with their money. Have a plan, trade your plan your trades, build a consistent wealth machine that generates income every single month. And you can do that with just a few different types of trade strategies. You don't need 95 of them, and you don't need to be scalping, day trading, or doing anything stressful. Okay? You can do it in just a few minutes a day. All right, take care. If you like this video, please click the like button down below. Could use your support in getting this channel out to everybody. If you are not a subscriber, what are you waiting for? Subscribe to the YouTube channel, get some education, okay, and learn and see what's coming up next. And if you're not a member of the Discord group and you want the insider scoop on why and what trades are being put on live, you can follow us every single trade live, myself, Igor, Gabe, many, many, many others, a ton of live trades. I would say on a daily basis, you're getting 4 to 5 to 6 trades from different people, maybe up to 20, 30 trades when you count some of the members in there. Tons of ideas, okay? And I'm giving you trade ideas every single day. Okay? You pick and choose what makes sense for you, what fits your plan. All right. You guys have a great evening. Take care, and we'll see you in trading tomorrow. Bye-bye.